This is problematic for Bitcoin, guys. All right, so listen, it hasn't confirmed a breakdown yet. Let's see where it is by the end of the day. But you had a wedge pattern here, down sloping line, up sloping. And again, it's starting to break here. Let's see where it is. But my concern is that we all know in general that support is down here at 74 to 72,000. It hasn't hit that yet. Generally, support needs to be tagged so that it can bounce and form a new bottom. That hasn't been hit. That's problematic. I still think it's going down here before it has any chance of a significant potential bottom. And even then, we'll have to reevaluate based on the stock market.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway explores Bitcoin's potential recovery to $95,000 by examining market trends and investor signals. Watch to see how strategic shifts may fuel a powerful rebound in crypto.
Essentially, App 11 muddies their stats. They're not really real, perfectly done stats, and therefore the company is being shady and, whatever. As a trade, it's already bounced, so there's not much we can do. If this were to flush back below 250 early in the day, I might be interested. But again, it's more of a news story that's kind of just fascinating. This is one you can see it had a gap up here on earnings. Then obviously tech started to sell off. It came in here. We actually bought it in smart money stocks. We played it up here. We took profits, went a little higher. I was going to reshort it. In fact, I've highlighted it in this broadcast of game plan to reshort at this level. It never got there. And obviously the dump yesterday. Would I buy a buyer here at 227 on a swing trade basis? No, but a gap fill down here. Heck yeah. If it gets down to 175, I'll nibble. Absolutely.
Bitcoin is quietly hovering between $85,000 and $88,000. But don't be fooled, the calm could quickly turn stormy. Traders are cautious as markets digest President Trump's upcoming tariff announcements, expected on April 2. According to K33 Research, Bitcoin's current stability hints that volatility is building just beneath the surface. If Trump eases tariff pressures, Bitcoin could soar, but a tough stance might trigger sharp declines, echoing previous market swings. Adding fuel to Bitcoin's potential rise, Plan B's stock-to-flow model suggests BTC remains significantly undervalued compared to gold and real estate, hinting at strong upward momentum. Meanwhile, corporate enthusiasm is rising fast, with GameStop recently joining MicroStrategy by holding Bitcoin as a reserve asset. All eyes are now on how Bitcoin reacts next week. Will BTC break through resistance to challenge $90,000, or could uncertainty push prices lower towards $78,000? Investors should buckle up. Bitcoin's next move could be dramatic.
Today, we just got the PCE data out about 30 minutes ago. The PCE price index month over month for February came in at expectations of 0.3%. The PCE year over year came out at expectations of 2.5%. All okay there. The problem was this. The core was hotter than expected at 0.4%. And the core year over year. So month over month core, year over year core was hotter than expected. In addition, another thing that caught my eye, personal spending, 0.4%. It was expected to be 0.5%, thus weaker than expected. And again, weaker spending is not good economically. It tells us that the overall consumer spending is slowing and therefore the economy is slowing. Now, this is the other kicker, guys. So again, wait, there's more, right? So we've seen a lot of tariffs imposed. This inline expectation, slightly hotter PCE on core, does not include any of the tariffs that we have seen being implemented. And that is the issue here, folks. All right. So again, that is the issue that a lot of investors are looking at. And when we flip back to the stock market, we can see again, this rollover here since the PCE data came out right here. We can see again, markets aren't tanking. I mean, they're not down massively, but again, they are lower and at the lows of the session, as again, what we're seeing is people worrying, and you can see we're down ticking even as we speak. All right. So again, that's your economic news update here as we get into things. And again, a couple other things to take a note on. What we do know from the daily S&P chart, we have, again, a retrace here into, this would be called the scene of the crime, the breakdown of this low, this pivot point. We broke down here, we retraced, we sold off. And yesterday in the game plan, I said, guys, keep an eye on this gap fill. This gap fill right here will be a test of support at just below 564 on the SPY. So that's going to be your first level to watch today. Now, interestingly enough, if we flip over to the intraday, where are we trading? We're at 564.40. So I would dare say by the first few minutes of the trading day, maybe even pre-market, we're going to be into that level. And then the question is, do we hold it? Do we bounce? Or do we break? Now, there's another thing I'm keeping an eye on. Take a look at this. You could connect these recent lows here, and look at this, folks. This upsloping trend line, so connecting this exact low here to this low here, we didn't get down there yet, but where is that coordination? It's basically right at that gap fill. So you have essentially a wedge pattern that's been building. Now, if we take away the gap fill, let me ask you guys a question here. What type of pattern is this? All right, you have a sharp down move and then basically inside bar chop in the lower vicinity. What we know from technical analysis is that is a bearish flag pattern. So again, I've been telling you all along, everyone else maybe, well, not everyone, but a lot of people talking about all the markets will rally. I mean, you've seen upgrades in the S&P price target, all of this thing from these big players, even Goldman Sachs and other names. I've been saying to you guys, be very careful. This market, again, I just go by a day-to-day analysis. Right now, the markets on this bounce have been weak. And if we break here, we could be not only headed back to the lows of 550 on the SPY, but to our next short-term target, which would be at 540 on the SPY. And eventually, I still think we're going to retest those August lows, which was the biggest correction in the S&P before the latest correction. That, again, was the biggest one in 2024 there, okay? So, again, keep an eye on 564 today in terms of the gap fill, also the upsloping trend line. If we close below it, it could set up a nasty Monday next week.
Predicting Bitcoin's future isn't easy, especially 5 years out. But there are good reasons to believe its journey will stay exciting. Bitcoin has surged in value over the past decade, powered by growing acceptance from major institutions and individual investors alike. Recently, spot Bitcoin ETF, like the iShares Bitcoin ETF Trust, have made it easier for everyday investors to buy into crypto without the usual hassles. This ETF alone has attracted nearly $50 billion, showing the widespread appetite for Bitcoin investments. Another big driver for Bitcoin's potential growth is President Trump's supportive stance on cryptocurrencies. His administration recently established a strategic crypto reserve, placing Bitcoin front and center. With Trump still early in his current term, further pro-crypto policies could significantly boost Bitcoin's price. Additionally, as tariff tensions mount, fears of rising inflation are driving investors toward Bitcoin as a protective hedge. However, Bitcoin's path won't be smooth sailing. Economic worries are real. A CNBC survey revealed that most CFOs anticipate a recession in the near future, partly due to the impact of tariffs. During uncertain economic periods, Bitcoin's price can swing dramatically, affected by investor nervousness. Furthermore, although regulations have been friendly under Trump, future policy shifts or tighter regulations could easily dampen Bitcoin's growth. Despite these risks, history suggests Bitcoin could still deliver impressive returns by 2030. Its past explosive growth, over 1,100% since 2020, shows potential, even if nothing's guaranteed. Ultimately, Bitcoin remains a speculative but intriguing investment that, for many, might be worth the risk. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.